Shortly after the market closed today, the DOJ subpoenaed NVDA and an escalating antitrust probe. Now, this kind of boils down to the concern that NVIDIA is making it harder to switch to other suppliers and penalizes buyers that don't exclusively use its artificial intelligence chips. How? It always has been hard to mix different graphics chips. Okay, NVIDIA is not doing anything special to do this. This is just how the tech is. Okay, they're made in different ways. They have different softwares that pair with them. It's hard to mix them. NVIDIA isn't exclusively doing that. AMD's the same way, and Apple is the same way as well. Okay, it's not anything special that NVIDIA is doing, and even more so than that, this is too early. This is several years too early to be an actual issue. The space has only existed for like a year and a half to the scale that we've seen. You know, AI's been around for a long, long time, right? But everyone called it algorithms. Oh, YouTube has algorithms, Google has algorithms. That was AI, but people didn't recognize it because they weren't really interacting with in a way that felt like meaningful to them, where they could recognize it as like an AI. Now it's different. Now we have these massive AI servers and stuff, and so now the concern is much bigger than it ever was, and because of that, the government is, I think, reacting more aggressively than it should. Okay, I think this is too soon. I think nothing happens with this. I'd even go as far as to say it's a bit stupid, because nothing in this report looks substantive. Okay, it all just kind of looks like we don't like them because they're the best, and so therefore everyone buys from them, and that's not fair to us. Other companies do make chips that are usable, but do not have the production scale that NVIDIA has to meet the demands of the large data centers. So it doesn't matter. And it'll take several years for there to be actual competition. There will be competition in the future. There will be cloud data centers built with chips that are not NVIDIA's in the future. Guaranteed. Because there's so much money to be made. Just look at the market cap that NVIDIA has. Everyone is salivating at the mouth to get into this industry, but it's going to take a few years for that to happen. And if you stifle NVIDIA now, you could create an entry for other companies, but you're going to slow down the overall innovation in the space. And that, in my opinion, is a critical error to make, because right now NVIDIA is keeping America in first, and so we just kind of need to let them do their thing. All right, I wouldn't worry about this though, because I don't think anything's going to happen with it. What you should be worrying about is the fact that the market is going to broadly sell off. So let's talk about that. So last week I put out the video on Thursday morning about being bearish on the market. And actually that turned into a vicious squeeze. This was so hard to hold because this key level had been tested so many times by the market. And we could see that it almost broke it, I think, on the day, like 4 tests. It was nearly impossible to hold after we talked about being bearish, and that was after a really good day on Wednesday. And for those of you who don't think I'm trading all this stuff, I am. On our 29th recap, this was hard to type because I got baited hard. I actually got out of my puts, and then when the market rolled over, I loaded back into the position, and the whole day I was like, I can't believe I got baited like that. The thing is when you see something get tested this many times, if you do get the breakthrough through that level, the pain would have been almost instantaneous. You're down 40% right here. If the market breaks through, it's gonna wipe you out of that position in a heartbeat. It's vicious. Okay, the more tests you have, the bigger it will go through when it actually captures that level. And then we had, even the gap up into this day after NVIDIA had their earnings, everything gapped down and then recovered. Of course, NVIDIA didn't. We'll talk about that in a moment. The premiums got ripped out too. It was just like a double whammy. But I maintained my bearishness. Not getting the break was extremely bearish. And they still tried to squeeze us on Friday into the 3-day weekend, which was unfathomable to me. So we kind of like midway through the day on Friday, it comes back, and then they squeeze it into the close again. However, and some people were frustrated by this. They were getting worried. But again, if you don't break this level, it's still massively bearish. Okay? You can see the alert I actually had slightly above that level to make sure that I do not get baited out again. So we held that, and today, and through all that pain last week, given, we closed, I took some profits on Wednesday, managed those positions. Thursday, got baited, but then got back in, and then got squeezed again on Friday. So frustrating. But then today was almost too much. Today's follow through was incredible. I was expecting the market to go to 464. That had been my target. And I'm breaking this down for Discord members a lot. And we actually went right through that level, or right below it. We're at 461. I actually closed all my puts as we approached the 464. Around 465 is when I closed the remainder. I'm closing them all the way down, just keeping the good discipline. Now let's talk about what I'm doing now. I was short on the Qs because, we can simply just look at the heat map and say, oh, tech is weaker than everything else. What's been carrying SPY and keeping it stronger has been finance, and it's also been health services. We can see consumer non-durables are strong today. What does that mean? It means the market's still getting even more defensive, okay? And some of this could be in preparation of inflation coming back in October, because we've been in a deflationary environment. That is my expectation, is that inflation does come back in October. So that's something to keep in mind. There's a few names that I really like that have been weak today. One of those would be GLNG. This had a nice pullback today, and this for me is soon going to become a buying opportunity that I'm going to really like, because I do really like this name. So I'm going to be making moves here soon. But what I did is I actually closed my QQQ puts. As we approached my 464, keeping the good discipline, it ended up melting below. But earlier this morning, I actually came in and I bought at around 11 the SPY 545 puts. Now, when you open a position like this, and in one day you're up 30%, almost, you got to take profits. You got to always be taking profits, and you always got to manage that risk, right? And I'm live every day in the Discord, usually for the full trading day, talking to members. And one of our members was kind of talking to me about how to manage that risk. He said this was a real struggle point for him. He didn't often know what to do in these positions. Now, for Discord members, and when I'm calling stuff out, I'm usually keeping it very simple. And I'm just saying, take profits. Now, let's say you're in a small account and you're not in a position where you only have one contract. You're just supposed to close one contract and then sit on your hands. No, you can roll that position. So if you had the 545s, we bought them for 5, they're now 640. You could sell that, and you can buy something like the 530s and lower your risk just through your allocation, right? Very simple, very easy. You still have a 21 delta. If it continues to melt down, you're going to make some money, but you don't have as much at risk now. Okay, you've rolled that position. And in fact, if we do see the market then bounce up tomorrow and test the 555, become a point of resistance and melt back down, that 555 could turn an opportunity where you could buy a second contract. Then you're making even more money. And that's good management on that position. Now, what you could alternatively do, and what I recommended to him, is actually sell some puts against the position if he didn't want to lower his allocation. What that does is that provides you a set amount of risk that you'll take if the market starts to reverse. There's still a probability that we come back up to the 555 and then blow right through it, and the market becomes bullish. I'd say it's the lowest probability, but there is a chance that happens. So if you sell a put against it, you define your risk, so you have limited upside, and you can also just buy back that put if that thesis plays out, right? So you could sell the 535 for 425, right? And you could collect those premiums. If the market melts up to 555, this probably nets you, I think it was actually up already like 10% into the market close. It might net you 25, 35%. You buy out back at the cheaper price, and then you continue to ride your puts to the downside. These will bleed, but these contracts will pay for the bleeding. You could alternatively more aggressively sell some shorter dated puts into this too. So you could have gone for like the 10th, a week from today. You said, okay, I could sell the 545 puts and collect, $2 for that. And then ride those out if you think you're going to try and time the bounce that we're going to get before it rolls over again. You could do something like that. But it's important that you're always using these management skills and kind of figuring out like how you manage those positions when you're in them, and understand how flexible options are. You could cycle in and out of different strategies. You could cycle in and out of a spread. You don't just have to set a position and leave the position. And understanding how to manage through those option strategies is so key for your success here. The lack of understanding in the strategies that you can implement with options is why everyone thinks they're so risky. Because it's actually less risky than stocks if you know what you're doing, because you have so much more flexibility in them. And a long-term portfolio is also way less risky. You know, I did my long-term portfolio update, and everyone knows I'm way outsized in Tesla, but I'm still up. I'm actually up month over month from August to September. Well, I guess Tesla did well. But I actually had, I guess a better example would have been July to August. I only had minor loss in July from August because I bought puts in my long term. I think there was even one point where I sold a bunch of calls against Tesla as well. And, you know, that's what I'm doing with Canva right now, is I sold a bunch of calls on Canva. And I'm just letting these pay me to hold the stock because I thought it had gotten way ahead of itself. This is another one of my long-term holdings. I still love the stock, but, you know, 128 is way overvalued. That values each individual restaurant at like $40 million, which is absolutely ludicrous at this market cap. That's ridiculous. That's too pricey. Sell some calls, get paid to own the stock. Stock goes down. I really don't care. I'm making money. It's paying me to hold it. So these are different things that, you know, I hope all the members of the Discord are learning, and hopefully you guys on YouTube can learn as well. I've extended the sale as well to join the Discord for one extra day. So if you use code 247, you can join the Discord. You can get the first month on us, and hopefully we'll be able to teach you some stuff. I hope you guys enjoyed. That's going to be it for this. You know, volatility is picking up. This week should be a really good week for trading. Above 20, things get really exciting. Oh, I said we were going to talk about NVDA. Let's talk about NVDA. NVIDIA is really easy, really simple. We have this clear line of resistance that NVIDIA tried multiple times to hold the breakout over, and it did not. You see in the pre-market here, it tried to break out of it. Actually, if we go to regular trading hours, we can get a better representation of what this looks like. And so it didn't break out over this resistance. Instead, it's melting down. So now look for this support here to hold for NVIDIA. And that's probably going to bring it to like 106. It could bring it to like 103, honestly. I imagine in the morning tomorrow there'll be some selling because of the DOJ report. I don't really know how extended that's going to be because I don't think it's that big of a deal. Maybe the market interprets it differently than me. It doesn't really matter because even before today, if you go in our Discord, and you know, the video was already a short-term play for me. So on my weekly report, I had talked about like, hey, I want to watch the video on the short setup, and I had already shared this chart here with our signal. Which, by the way, we now have a signal bot. We had some issues with it today, but now it is fully operational. It is paired to my trading view. All these alerts in my trading view will be pinged in the Discord when they occur. And then I try to write in some notes here as well for members. So it's a pretty cool feature. We got more coming out. We just rebuilt the bot that is paired directly to my account. So you see all my management in real time. And then we got more. We're working with Charles Schwab's team right now to create an unusual options tracker, which will be huge. And we just got some more responses from them today, collecting that data. And we're going to roll out these products. It's going to be awesome. That's going to be it for this video. Yeah, I start physical therapy tomorrow, and I am so excited because I have like a compressed disc in my neck, and I can't feel my arms because of all the sitting I do, which is why I did half of this video standing. None of this is relevant, but the video doesn't end until I say the two magic words. God bless.